Hey guys, this is a Forex price action trading course part 2. This is lesson number 1. How to gauge the market bias consistently. Alright, let's get going. Okay, so here's an overview. Now first I'll be going over why markets change its bias to begin with. Alright, then I'm going to go on to how markets change its bias. So in this section, I'm going to present some basic ways in which markets change its bias and what price characteristics to look for so you can know when these changes occur. Okay. Alright, so why markets change its bias? Now the basic reason in my opinion is because the market bias is measured with past price. So let me show you what I'm talking about. Alright, so take this weekly chart. Now what we learned in part 1 of this course is how to apply basic price action analysis. So for example, we would measure the future short strength of this pivot right here and the future long strength of this pivot right here. And for example, if this short strength is stronger than this long strength, well, that tells us that price is likely to reach this pivot low right here before reaching this pivot high, and thus the market bias will be down. However, like I mentioned earlier, this future bias of price was measured with the price action from this point right here to this point right here. So anything beyond this area will be future price. And strength in future price can change at any time. So in other words, although we predict the market bias of future price through this price action right here, if certain things happen in future price, as a price action trader, there are times that we have to change the market bias. So in this case, although because we measure the future short strength of this pivot against the future long strength of this pivot and found that there's more future short strength than long, and thus we were short biased, beyond the point that we measured that bias, if certain things happen with price, we have to change the market bias, for example, from short to long. Alright, so let me explain this a little bit further. Let's go on to the next text. Okay, so at a basic level, current price is more valuable in terms of the direction of future price than past price. Okay, so at a basic level, current price is more valuable than past price. In other words, it has more weight in terms of the decision-making process of a market bias. So, if we measure the market bias from this pivot to this pivot right here, giving us a market bias of being short, since the price action in this area is more close to current price, it is more valuable than past price. Thus, depending on what happens on the area of price action that forms after the area that we measure the market bias, there are times that we must change the market bias. And in this example, if we were short biased, there are times that we must change our bias to long. So one last example is, if we measure the market bias through this pivot right here and this pivot and found that there is more strength down, that tells us that price is likely to reach this pivot right here before reaching this pivot. However, let's say that price changes market bias at this level right here, in which case that will state that we should be long biased. Or in other words, price is likely to reach this pivot high up here before reaching this pivot low. Alright, so let me give you another perspective on why markets change its bias. Okay, so a philosophical way to look at this is that markets are a living, breathing entity. Now every day and every minute, its tendency can change. Okay. Alright, let me zoom out here. Now, if you look at this from a philosophical perspective, another way to look at this is that markets are a living, breathing thing. So in other words, it changes its mind every day, just like any other organism, right? So if you look at past price in this perspective, for example, if the market wanted to go up right here, wanted to dip a little bit, and it was going to go up, it changed its mind and came right back down all the way down here. and it came back, and it kind of wanted to go down the next day, but it decided not to and go back up. All right, so let me zoom back in here. All right, so again, the reason why markets change its bias is first of all because current price is more valuable than past price. And moreover, if you combine that with the fact that markets are a living organism, it changes its mind every day. So if the market decides to show long strength in this area, since current price is more valuable than past price in terms of the future direction of price, to a price action trader, the market bias can change. All right, so now let's go on to some basic ways in which a trader can spot if a market bias has changed. Okay, next slide. All right, how markets change its bias. Now, the first way in which a market bias changes its bias, and moreover how we could spot its change, is if a target has been reached. So when a move's target has already been reached, price will come back to the pivot in which the strength was measured. Okay. All right, so I'll be using this weekly chart to demonstrate this. So let's say that we measure the future short strength of this pivot right here and the future long strength of this pivot right here. And we found that there was more long strength than short strength. So in other words, our analysis is telling us that the market bias is long. And moreover, that price is likely to reach this pivot high up here before reaching this pivot low. And so we would be taking long trades, for example, on the lower time frames. However, even before this main target up here is reached, if this pivot's long moves target has already been hit, for example, at this area right here, price is likely to come right back down to the pivot in which the bias was based off of to begin with, which will be right here. So in this example, if the target was hit at this level, at this point, the market bias changed from long to short, at least down to this pivot low. Okay, so let's go on to the next text. Okay, so at a basic level, these targets are on the higher time frames at price levels with strong opposing strength. And keep in mind, these targets often do not form pivots and are simply price levels in which strong opposing strength is generated. Okay. All right, so again, on this weekly chart, if our market bias was long due to the strength differential between this pivot right here and this pivot, if a change in bias occurs because a target is hit, typically there are very strong price levels on the higher time frames that become these targets. So let's go ahead and see if there are any strong levels on the higher time frames at this level right here. So in this case, since we're basing this on a weekly bias, let's go over to the monthly chart. Okay, so on this monthly chart, that long bias on the weekly chart was measured with this pivot right here and the opposing pivot up here. So that weekly bias stated that price is likely to reach this pivot high right here before reaching this pivot low. However, even before this main target is reached, price reached this trend line, so this pivot to this pivot right here, which became a target for that weekly bias at this level right here. And thus, the bias changed from long to short, all the way down to this pivot low right here. Now, I also mentioned that these targets often form in the higher time frames at price levels with strong price characteristics. So let's go ahead and see how strong this trend line is on the monthly chart. So it has 1, 2, 3, 4, 5, 6, 7 touches on it. So on a monthly basis, the strength of this trend line is about a normal to semi-strong price characteristic. However, you have to recall the basic rule of price characteristics, and that's that the higher the time frame's price characteristic, in this case the trend line, the stronger it is. So since we're measuring a weekly bias, this trend line that's just a normal strength price characteristic on the monthly chart actually is very strong in terms of a weekly bias. Okay, so let's go back to the weekly chart. All right, so again, on this weekly chart, we measure the market bias of this pivot to this pivot right here. And it's stated that there is more long strength, and thus we expect price to reach this pivot high up here before reaching this pivot low. And so we were taking long trades on the lower time frames, for example, but at this point when price reached that monthly price characteristic, that's a normal strength on the monthly chart. However, it produces a lot of strength down on a weekly basis. So at this point, when that target is reached, we must change our bias from long to short, at least down to this pivot low right here. And moreover, it also states that price is likely to reach this pivot low right here before reaching this pivot high right here. All right, so let's go on to another way in which markets change its bias. All right, so another way that markets change its bias is through recent strength. So if price begins to create strong strength in an opposing direction between the two pivots in which strength was measured, price is likely to change its bias. Okay, we'll be using this weekly chart for this example. So let's say we measure the market bias between this pivot right here and this pivot. And we found that there's more short strength than long strength. And moreover, it states that price is likely to reach this pivot low right here before reaching this pivot high. So based on the price action up to this candle right here, we're looking for short entries. However, let's say recent price starts to show strong strength long. Let's say at this level right here. Well, then from this point on, we have to change the market bias, which was once short, into long. And moreover, that states that price is likely to reach this pivot high up here before reaching the pivot low in which that recent strength was created. And so from this point on, we want to be looking for long trades, at least up to this pivot high right here. All right, so let's go on to the remainder of that text. All right, measuring future price strength just by the way it moves. When price has a lot of future strength, it forms compact price action. Okay, so if you watch my forecast and even in part 1 of this course, I mentioned there are certain ways that price moves which shows future strength, long or short. Now I refer to this movement as compact price action. Now this compact price action shows strong, recent or current strength in a given direction. Now the reason why I call it compact price action is simply because the width between each peak is very minimal, as you can see here. Now if this compact price action forms with an upward slope, that shows strong future long strength. And opposingly, if that compact price action is sloped downward this way, well, this shows strong future short strength. Now on this chart I'm showing you right now, this compact long price action actually formed in this area. So let me go ahead and show you what that looks like. Let's go over to the 1 minute chart. Okay, so on this 1 minute chart, this area right here is a very good example of compact long price action. Now as you can see, the width between each peak is very minimal, and those peaks being right here. Now in future lessons, I'm going to go through each one of these ways in which markets change its bias in further detail. But for now, just remember that if this compact price action forms, in this case, long compact price action, even if we were short biased on the weekly chart, that will still change the market bias from short to long on the weekly bias. All right, so let's go on to the third way in which markets change its bias. Okay, so another way that markets change its bias is through new pivot strength. So in between two pivots in which strength was measured, if another new pivot is created and this new pivot is stronger than the opposing original pivot, the market bias will change. All right. So we'll be using this daily chart right here for this example. So let's say we measure the future long strength of this pivot right here against the future short strength of this pivot right here, and found that there is more long strength than short strength. So that's going to state that price is likely to reach this pivot high right here before reaching this pivot low right here. And so we'll be looking for long trades, at least to this pivot high right here. And let's say this repeated over and over. So all these pivots here had less future short strength than this last pivot's long strength. So as price came down on each of these pullbacks, we were always looking for long entries. And so on this final pivot right here, we measure the future short strength against the future long strength of this pivot right here. And still we found that there was more long strength than short strength. We will be looking for long trades. However, hypothetically, let's say price came down right here and came back up and made another pivot. Now, if we measure the future short strength of this new pivot right here, and for the first time in weeks, if this pivot's future short strength is stronger than the future long strength of this pivot right here, well then that'll change the market bias, which was once long, into short. So in other words, that's going to state that price is likely to reach this pivot low right here before reaching this pivot high right here. So in which case, as price falls, we want to be looking for short entries because the market bias has changed. All right. So I'll be going over each of these ways that market's bias can change in more detail in future lessons. But for now, just remember these three basic ways in which market biases can change. For that's the only way to consistently measure the market bias. Okay. All right, next slide. All right, so that was it for that lesson. In the next lesson, we're going to go over gauging the market bias with multiple time frames. So I'll be explaining the relationship between the biases on multiple time frames, and moreover how to use those relationships of different biases on different time frames in trading. Okay, so again, if you have any questions about this lesson, please leave it in the comment section. And I hope you guys have a great rest of the day. And thanks for watching. All right, bye.